Hey, this is Akshay Kumar from Emagia Corporation welcoming you all for today's webinar. Before we begin, let's go over a few housekeeping items. I would like to request you all to please mute your phones during the presentation. For all the attendees with any questions that you may have, we will have a Q&A session at the end of the presentation and request you to key in all your questions on the WebEx chat to the host. And we will answer your questions sequentially. If we are unable to get to any of your questions due to any time constraints, we will respond to them separately over an email. Just to let you know all that we will be recording this session and we can share it with all the attendees for today's webinar. Here is the agenda for today's session on finance transformation, a journey to the new digital era. We have with us Phyllis Saavedra and Ian Chambers as speakers for today's webinar. Phyllis is the Director of O2C Solutions at Emagia Corporation, and she'll be talking about providing finance transformation from order to cash and leveraging modern technologies to boost efficiency. Phyllis has been working in the field of credit and collections for more than 20 years and has worked with several esteemed organizations like SanDisk, Novellus, and Aspect Communications prior to taking over the reins at Emagia Corporation. And she has also been an extensive has an extensive experience as a consultant in all areas of the order to cash lifecycle. While Ian Chambers, he has been the global head, a former global head of credit at Unisys, and Ian is a very senior level finance professional with extensive experience in global business services and shared services environment, including the global process and operational management. Ian comes with rich experience in revenue cycle, order to collect, and credit management with expertise in transition projects, best practice rollout, and leadership of global transformation projects. Ian will be talking about global shared services and the CFO priorities around global shared services. Without taking much of your time anymore, let me welcome Ian to start the presentation. Over to Ian. Thank you.
Thank you. Actually, I'm going to hand straight back over to Phyllis, who I think is going to take us through the agenda and a couple of slides before I start my part of the presentation.
Thank you, gentlemen. So welcome. Thank you for joining us today. The agenda that we're going to follow is we're going to start the presentation with Ian discussing the changing role of finance. He'll talk about some of the trends in modern finance operations and areas that we can focus on for order-to-cash modernization. He'll then pass the presentation over to me, and then I'm going to talk to you about some of the tangible ideas, tangible ways that you can transform order-to-cash, including things like billing and cash application. So before we begin, I just thought I would tell you a little bit about Emagia, the host of this webinar. Emagia has been around for about 13 years. Our mission is really to help our customers drive efficiency through the automation and optimization of the order-to-cash processes. We have numerous marquee customers that we have worked with. Our sweet spot tending to be large multinational companies, shared service centers, and companies that just want to begin the automation journey, may have large volumes of transactions, may want to improve the onboarding process and all of these things, all of which really help to improve things like working capital and cash flow. Emagia has basically 3 different offerings. One of them is a working capital analytics suite. And what that's really used for, later on in the presentation, I'm going to talk to you a little bit about analytics and the uses of that. So the suite really is used to analyze the data that we receive from customers, perhaps to determine how they want to begin the order-to-cash automation journey, optimization journey. Sometimes we have customers that use it just for close reporting and auditing and things like that for the dashboard and analytics. Our second offering is our standard. It's a modular offering, and that's our software. that helps to operationalize different processes like credit management, collections, deductions, as well as cash application. It's a software. It resides above the ERP system and consolidates your accounts receivable into a single viewpoint. Our third and final offering is the Big Data Suite. And Big Data, really in conjunction with the, either our operating models or our analytics, allows you to utilize large volumes of data that you've got stored, structured and unstructured data that's being stored in a data lake, that you're being able to use all this information that you've got to gain insights into the business. And with that, I'm going to turn it over to Ian to begin the webinar.
Thanks, Phyllis. Okay, I would like to spend the next 15 to 20 minutes just talking about the role of finance and how it will be changing as we go forward in the digital age. Okay, so the first slide I want to just talk through is this is a survey that was done by Forrester Consulting a few months ago, and basically asked around about 200 senior finance leaders, active decision makers, what are the strategic priorities for finance operations currently? And as you will see, increasing finance operations efficiency came out top at 69%. Managing risk and driving compliance was 59%, and improving finance processes was also at 59%. And basically what it seems to be saying is that business leaders are demanding greater transparency in finance operations and performance. And therefore it's logical that finance leaders should be prioritizing increased efficiency as well as managing risk and enhancing processes. And I think this quote from David Pincher, who is a senior lead partner with EY, is very interesting and very apposite. By 2020, we'll see finance teams much more as integrators of information, process owners, and sophisticated managers of third-party relationships. And I think it's basically talking to the fact that the role of finance as we move into the digital age will change significantly. And really looks at the role that CFOs and by extension finance and indeed SSC organizations will be expected to play in the future. And throughout the first part of this presentation, I've used CFO priorities. I think we can say they're really interchangeable with finance organizations as a whole. But really one of the things that is coming out from studies is, CFO and the finance organization in general, the challenge for them is to become innovators and become champions of innovation. I think business leaders are now looking for finance to deliver tangible and measurable improvement, as we said, and also to drive change within the organization. Innovation is no longer optional, and when we see the move to things like cloud-based solutions, we've seen the growth of big data, and we'll continue to see the increased role of data analytics. These are all things which are really moving forward finance from being a functional, numbers-based, process-based, reporting-based organization to one that really plays a strategic and innovative role within an organization. And business leaders are demanding that finance deliver greater insight in business performances. And I think this is a key thing. It's no longer just about keeping the score. It's really about interpreting the data, using analytics to predict future behavior to drive informed business decisions. And also, I think that finance will have a key role in actually driving the integration in a globalized world. One of the things that we see time and time again, and this happens, and it's happened in organizations that I've been in, is getting to the data is actually very difficult, and having one set of data, one set of figures is often very, very difficult. And I think this is something that finance will be expected to drive. That they will provide a centralized repository to house and share data, and all stakeholders will work from the same page. And the ability to actually get that data and access that data on a timely basis, I think, will be crucial. Again, another survey, this time by the Aberdeen Group, shows that best-in-class organizations are committed to data sharing. They'll be twice as likely to have data sharing programs than other organizations. And again, I think this will be a key element as we go forward. Okay, the next element I just want to talk to in terms of priorities is the development of new skills and, again, the deployment of technology. So CFOs will be expected to create an environment to promote the leaders of the future. And really this requires people to spend time in high-value tasks rather than maybe the traditional transaction processing areas that you know, a lot of finance have been involved in before. Next generation will need to use and be comfortable with data analytics and to have use real-time information to become business partners and again, be part of this decision-making process. And I also want to identify, you know, the role that SSC and global business service organizations will play in this. You know, with their capability to standardize and integrate and implement technologies and you know, have one platform and one repository, I think they have a key role to play. And again, this is something that I've seen in my career with Unisys, is very much the SSC organization was driving this forward and pushing this out to the rest of the organization. I think the CFO and the finance department will become more strategic as we go forward. And I think a lot of the time, you know, in the past, we've probably seen maybe the CFO and the CIO not having conflicting agendas, but certainly, you know, some competition. And I think, you know, that we'll see greater collaboration between finance and IT. And, you know, there will be equal stakeholders in pushing forward data and analytics and modeling. I think the CFO and, again, the finance department will be seen as knowledge officers and will be a repository for business decision making. I think increasing technology will enable fewer staff, and that will mean less managers. And whilst that may seem a bad thing, it's probably a good thing because it actually empowers people to be doing the high-value tasks and interfacing with the business rather than actually just managing other people who are doing, you know, perhaps non-value-add tasks and repetitive tasks. And I think we will see the finance role changing from what is to what it ought to be. Okay, I now want to just spend a little time looking at, you know, how a finance operation is expected to transform and align to corporate priorities, because obviously they're not going to be doing this in a vacuum. Okay, and again, just looking at a slide again from Forrester Consulting, you know, the question was, what are the top challenges finance operations face in meeting its priorities? And 41% indicated that they had poor or limited knowledge of finance operations. 32% felt that they did not have timely access to relevant data, which was necessary for informed decision-making. And 32% were challenged to reduce response times. Okay, so these are obviously key areas for focus and improvement. And then when we move to the next slide, we can see another survey. Again, this was done by the Aberdeen group, which looks at the organizational pressures upon a finance department. And again, you know, the view is that finance takes too long, too resource intensive, are slow in delivering financial information, and need to ensure an enhanced collaboration across different business units and stakeholders. And bear in mind, you know, this is coming from people within finance. You know, so although this may seem critical, yeah, I think it's a fairly honest assessment of, you know, the needs and where finance organizations need to develop. If we drill down to the OTC area and look at what they see as their pressures, and they're very much more at the micro level. You know, I think the last two slides were at the macro level. This is very much micro in terms of, you know, what are the actual day-to-day tasks. Yeah, which tends to be, and is a good thing, and certainly, again, from my experience, yeah, it's a good thing that people are focused on delivering results as well as delivering, you know, the long-term strategy. Yeah, and so most of the people within the OTC cycle see their pressure, and I guess their focus is on improving cash flow and forecasting and reducing days sales outstanding, which, as I say, is logical because obviously they're looking at how do we get improved results and how do we get improved predictability of those results in terms of forecasting. And looking at what things which may help in terms of order to cash transformation. Yeah, I think as we've already alluded to, automated processes will improve operation efficiency and free up resources. So the more that people can be focused on value-added tasks, such as cash collection, and less on the transaction processing tasks, then that's got to be a good thing. So certainly automation can help in that area. Yeah, enterprise-wide collaboration, providing efficiently produced and accurate data. And again, this talks to data analytics, and being able to get information out to all stakeholders within the company. Increased collaboration and driving business decisions. And I think, again, this is a big factor in where finance needs to be heading. And access to real-time data via digitalization. Yeah, I think we've all, whichever company we work for, have suffered from the fact that data may be there, but it's buried within several subsystems, and actually extracting that data and getting meaningful analysis in a timely manner is often a challenge. And then when we look at high-efficiency finance organizations, and we look and say, what are the characteristics of these top performers? What do they show? And they tend to have a focus on efficiency and effectiveness. They have internal and external benchmarking, so they know how they're doing compared to their peer group and possibly their competitors. They tend to have end-to-end process ownership. And I think over the last 10 years, I've spent a lot of time over the last decade or so in the process ownership side of things, where you're really looking at the long-term strategy as well as the day-to-day, and have a long-term vision and know where you want to get to in the next 5, 10 years. A focus on continuous improvement, driven by data analytics. Again, continuous improvement is very, very important. You always need to keep moving forward in whichever process you're working within. Work with business partners to grow profitable revenue. And again, this is absolutely key. The finance organization needs to be working as a full partner to grow revenue and to grow profitable revenue. Obviously, we've seen the continued rise of shared service centers and global business services over the last X number of years, I think since they started in the early 90s. And these facilitate optimizing process sourcing, so companies can choose low-cost environments, they can choose economies of scale, and all of this facilitates the effectiveness of a finance department. And then obviously enabling technology is absolutely crucial. You've got to have the internal systems, the IT systems, to drive you forward and be able to support the finance organization. Okay, I'd like to move on to areas of focus for OTC transformation. And you can see from this slide, this is a fairly typical, how many global shared service organizations are structured. It could be regional, it could be global, it could be sub-regional, but generally, it's many stakeholders, a lot of data out there, a lot of systems, whether it's an ERP or legacy systems, and a lot of interlocking sub-processes. And with order to cash, again, there's interdependencies, but there's a lot of sub-processes, all of which have to work, if not seamlessly, then certainly efficiently, for us to achieve what we want to get and the results that we need to get. So there's a lot of dynamics within the order to cash cycle. And there's a question which said, what would be the main areas of focus for additional investment in technologies for finance operations? So 60% of people said automating and accelerating invoicing and payments. And I think this, again, is a key area in terms of automation. Better reporting, analytics, capabilities for better decision-making. And I think there's two things there, is better reporting, more timely, being able to get the true data, and also then using that data knowledgeably and to the for the best use, and reducing paper trail through improved automation and digital processes. So whilst progress has been made in terms of moving to a paperless organization, I'm sure there's still a lot of organizations out there which are mired down in processes that involve a lot of trees being sacrificed. Okay, so the next question, and again, this is Forrester Consulting. The next question that the 200 finance leaders were asked was, to what extent are different technologies perceived as enablers for the finance operations to achieve its priorities? And I think really this kind of gets to the nub of the challenge. So business analytics and business intelligence was identified as 58%, cloud-based services 53%, business network 51%, and big data of 50%. Internet of Things, I think that's 35, but I think really the top four are key and crucial, and I think that drives home the message which is coming out from all of the other slides that we've seen so far. And as I said earlier, leveraging enabling technology is key, and the Hackett Group did a study, and of the respondents within their survey, 73% said automation and technology was the top strategic challenge. And automation frees up the resource from transaction processing, as we've already said, to value-add activities. And this is where really the finance organizations in harness with all of the other stakeholders need to be driving this forward. Analytics technology can turn data into insight. So I think we've all been in a situation where we have heaps of data, and it's really cutting through that and saying, how do we use that data to its best effect? What is it telling us? And how will that then inform business decisions? And the last point that Hackett brought out was that companies should utilize technology partners with deep expertise and have experience in new technologies. And I think it's a very, very salient point, because obviously, most companies are good at what they do, which is selling service or products or whatever. They may not necessarily have the inherent skills to be able to do all of this on their own. So I think finding the right partner and going forward with that is key to making sure that this happens. And then finally, if we look at what are organizations within the finance and OTC and SSC space doing leverage and enabling technology for? And I guess the short answer is pretty much everything within the OTC cycle right now. And I won't go through one by one on all of those, but certainly, one of the things I was doing recently with Unisys was e-billing. We were looking at cash application automation, and I think that's a very, very exciting area where there's big progress being made over the last 2 years in terms of robotics. But I think every company, every organization should be looking at all of these processes and all of these disciplines and thinking about what can technology do for them in this area. Okay, I think that is me. I'd like to hand over to Phyllis, who will now take you through her part of the presentation.
Thank you, Ian, and thank you all again for joining us today. So Ian spoke to you about the changing role of finance in the business and finance operations, and specifically how the CFOs are prioritizing the things that need to get done. What I'm going to talk to you about today is really specifically how you can make this happen, how you can start the finance transformation journey, tangible things that maybe you can pick one or two that work for your company. You certainly can't boil the ocean. It's very important that you look at this in terms of what your company needs, where the best way to begin the process is, and certainly what your KPIs are and that you need to meet. So as I said, the order-to-cash cycle, as you know, begins with the order management, goes all the way through cash application. It's a very complex cycle. It is very manual in nature. steal from what Ian said a little bit earlier, these departments are tree killers. And so the whole goal of finance transformation within this area of the business is really to help you to lower cycle times, reduce costs, and at the same time improve efficiency throughout the business. There are really 4 technologies that we look at in terms of finance modernization. The digital technologies, what does that mean? That just very simply is going paperless, looking at how you can reduce reduce paper and the manual processes. Looking at your data, being able to use these large volumes of data that our companies now have. We have large volumes of structured and unstructured data just sitting there, and we'd like to be able to use that for future business. Analytics is another way, using all that data to gain insight into your business, whether it's using information that you have or information that you've gained over time from customers to help you predict and prescribe ways that you should manage your business in the future. And finally, I'll talk a little bit about automation, tools that companies such as ours have and other companies out there that help you to automate processes within the order-to-cash life cycle. So the first thing I told you, I talked about was digital. How could you go digital? What are the ways that you and your business can eliminate paper? There's quite a few. You can see here I've listed things like invoices and payments and documents. Really, this is fundamental to the modern business. Mailing an invoice is an archaic process. If you guys have a lot of invoices you're mailing out, this might be a great place to start. Electronic bank statements, electronic correspondence. No longer do we need to do things on a one-off basis, but we can automate how we're sending letters and statements, how we're getting documents out to our customers, as well as how we're onboarding customers. Automating something like a paperless credit application, giving your customers something online to go to so that they don't have to fax in a credit application. Another great way to begin the finance transformation process is with a customer self-service, with things like self-service portals. You want to be able to consider putting information in the hands of your customers. It's a 24/7 world. We can no longer be in touch with our customers 24 hours a day, so you want to be able to give them access to the system. Let them pull invoices, let them grab statements, let them make payments. Instead of calling them, instead of trying to get the payments out of them, let them send the payments to you. Robotics is another way that we're doing this. Robotics is really coming into the forefront for ways to grab remittance information in cash application systems. A lot of your customers are probably using third-party portals to put their remittance information. Robotics allows you to go into those portals and pull information in. I think the bottom line of what I'm trying to say, and I can list tons of different opportunities, is that it is important to give your customers the opportunity to do some of the work themselves and to feel satisfied that they can get access to your business whenever they need it. One of the things that Emagia preaches, and I'm probably the greatest evangelist for, is a single source of truth. Large companies, multinationals, shared service centers, and even smaller businesses often have multiple systems. They may be multiple ERPs that have been gained from inorganic growth. They may just be that you're transitioning to one and you have multiple systems. You might have a region in Asia that's working off a spreadsheet. Your agings and your accounts receivable might be on a spreadsheet in Japan. Being able to pull all of this data into a single source, being able to see it in a single source, report on it, forecast on it, and react to it is going to make you a more efficient operation. It will also allow you to provide management reporting. It'll allow you to break down those silos that your business is working in. And I think truly, if you are a larger company, if you are multinational, if you're considering a shared service center, or you just even have a couple different locations within the United States, getting a single source of truth will help you. It will also help you with one of the biggest problems that I hear customers complain about is rolling up of your customer data so that you can see a parent-child relationship of some of your larger customers. Data lakes. You know, a data lake is really a repository for large amounts of raw data. As I said earlier, all of our companies now have tons of data. There's structured and unstructured data that's out there. We need to be able to use this data, pull it into a single source, whether it's being able to search on it with something like a Google search, or whether it's being able to pull it in and use it for things like analytics. We want to make use of all this information that we've got. If you're a company with large amounts of data, you should really be, instead of having it just sit there taking up storage space, optimize it, being able to use it for benefiting your company in the future. So analytics, you know, Ian mentioned analytics a lot. I talk a lot about analytics. What are analytics? Really, you know, analytics are just understanding the patterns in your business, really using the data that you have to predict, prescribe, and review the information you have in your business. So how do these analytics work? Really, what analytics do is we begin with pulling all the information, data mining that information, bringing, in this case, in the case of order to cash, bringing all of the accounts receivable data into a central repository, then applying machine learning, advanced statistical techniques, and being able to gain insights and patterns from this information. How is this going to benefit you? You've got all this information, you're pulling it through. It can be used for things like to forecast information, forecasting cash flow, for example, based upon earlier payment patterns of your customers. Being able to apply cash within cash applications based on looking at the strategies and how your customers have paid historically. Using all this information to review your current organization, maybe using it to strategize, pulling all of the analytics in on collector efficiency. So maybe you want to look at where your collectors are located, how you're utilizing your teams, cycle counts, things like that. All of these things can be done using analytics. Analytics are great because they can be shared and published. When you hear people asking for dashboard reporting, and we want to see these metrics, we want to see these KPIs, that's what you would use analytics for. If you want to share this information, publish this information, analytics are a great way to go. So there's really, you know, I alluded to there are really 3 different types of analytics. Descriptive analytics are similar to what they sound like. They really describe and help you understand what has happened within your business. It's great to use for getting all your KPIs in one place. Maybe you want to use it for month-end or close reporting. Maybe you want to use it for audit reporting or management reporting. You can use these KPIs and dashboards and use all the information that you have within your business to really describe what's been happening and monitor the results. Analytics are also predictive, as I said. You can predict things like DSO in your business. You can predict when your customers are going to pay. You can utilize the information, for example, within credit management. You can predict credit scores. You can pull in information from third-party systems that will allow you to score your customers, give them ratings, and help them determine whether or not they're a high risk or a low risk, predict how they're going to pay. And again, you can predict things like bad debt write-off and various other KPIs and metrics within the order-to-cash world. Pardon me. And then, of course, there's prescriptive analytics. These are used to tell you what you want to happen in the business. So when do you use them? You want to use them for deriving strategies, policies, optimizing what you've got, optimizing your pricing, maybe using them to figure out whether or not you need or would benefit from a shared service. Maybe, you know, do you want to have a centralized or decentralized organization? All of these kind of prescriptive analytics will tell you, will help you, in fact, to determine how to run your business. The slide here just gives you a little example of the different types of analytics you can get when you're looking, things like collector efficiency, dispute analysis, so you can look at how your customers are, where they're deducting their payments, root cause analysis and things like that, cash flow forecasting, all of these different types. KPIs and dashboards come in probably hundreds of different forms and fashions. You need to figure out what KPIs you're managing to in your business, what things are important to your business, and then you can either use a third-party company or internally derive these analytics so that you can monitor and watch your ongoing daily processes. So now I'm going to talk a little bit about smart automation. Automation happens to be my expertise. That's what I work with customers on a daily basis. There are several types of smart automation out there. You can automate things like, as I spoke about earlier, things like credit strategies, how you're onboarding your customers, who's high risk, who's low risk. You can automate collection strategies. What do you want your collectors to focus on? Do you want to be a proactive environment? Do you want automated letters to go just to low-dollar customers? All of these things can be automated. Dispute resolution, things like getting a workflow attached to a dispute, looking at reason codes. Automating cash application. Cash application is such a manual process. Is that something that your business would benefit from? Typically, many large companies have 10 to 20 cash applications analysts who spend all their days applying cash. You can use smart automation to minimize those tasks. Again, forecasting, and then, of course, electronic payments. That's a great way to start the automation process. So let me begin by talking about credit process. Credit is the front end of your business. It's how your customers, in many cases, see you initially. Anytime, and I like to tell my potential customers this, starting with the credit process, if you have a credit application process that you're already using, is one of the lowest cost, highest benefit areas of beginning the automation journey. Any good automated credit process should give you several things. One, there should be an online credit application. Your customers should have the ability to click on a link and fill in a credit application. Credit references and bank and trade should be sent out digitally. They should all your documents, all your references, all your applications should be stored in a single source somewhere in the cloud. They should have digital signatures. Digital signatures are now being held up in most courts. Everything should have flexible terms and conditions that you can put in your own terms and conditions. It's a great way to get customers to agree to your terms and conditions. And of course, you should have a workflow and credit scoring attached to it. Again, a great way to start the finance operations automation process. Bringing your customers on board quickly and easily builds customer satisfaction. It builds the relationship. Getting them on board faster definitely helps in the long run. And creating these processes that are standardized can help you to be SOX compliant, audit compliant, and help you have consistent processes throughout the organization. Automating your receivables, there's another great area to look at. What that really means is having access to your agings online, having consolidated agings from the entirety of your business, whether you're on one ERP, multiple ERPs and spreadsheets, being able to see your AR in one place, to be able to have parent-child roll-up of your customers, to be able to forecast when your cash is coming in, find a system that allows you to have electronic invoice and statement presentment. Another great place to start, sending your invoices in an automated fashion, getting your statements out to your customers in an automated fashion. And of course, anything that automates all of the processes, such as mailing and emailing. All very important places to look at when you consider finance transformation. Collection process. The collection process, again, when I talk to my potential customers and the customers that I work with over the years, collection process is the area where I say that you get the most value for your automation dollar. If you look at a system that allows you to create task lists for your collectors, no longer are your collectors having to look at a gigantic aging, maybe starting only with high dollar or going A to Z. In any given week, they're probably not covering the entirety of their aging portfolio. If you have a rules-based system which gives your customers specific tasks they need to follow up on, it makes it so that they're addressing the issues that are of value to your organization. It could be things like being proactive. Maybe you want to create a task list where a collector is following up on somebody that it's going to be due at quarter end. Every company in the world has a quarter end push. So today they see everybody that's due within 10 days of quarter end. Maybe it's a past due perspective. All of these things, you should have a system that derives rules and strategies for your collectors. Again, just like any AR system, AR module, you want automated statement and letter generation. Any solution that you consider, any finance transformation, another great area to look at is a system that has notes and note-taking capability. Collectors are notorious for writing handwritten notes. Again, a waste of time. It can't be transferred over within the system. You need to be able to put in notes, put in things like promises to pay. If a customer promises to pay, why should a collector have to see that invoice, see that information until when or if that customer doesn't pay? And if they pay, it's all done. It's off the collector's task. You want to be able to automate the low-touch aspects of collections. Again, the whole point of finance transformation as far as automation is take away and automate these high-touch, low-risk areas of your business. Have your teams working on things that are high visibility, high risk, thought-provocative components of your business. If you're a business that has a lot of short pays because of disputed items, you might have a lot of deductions from invoice, then one thing that you might consider is a dispute or deduction automation process. Any solution that you would consider should have the following things. It should have a workflow. It should be able to, when your customers deduct or you know that they're going to short pay because of a disputed item, you should be able to attach a reason code to it so that you know why they deduct. So you can report on all of these reasons and so that you can workflow these issues to the appropriate person. Your customer didn't receive all the items that they wanted shipped to them, for example. So they deduct. In a good system, what it should do is it shows that, a product shortage. It then gets routed to your shipping department. Somebody validates whether it's a short shipment. That person approves a credit memo if necessary. It gets workflowed through the system. A credit memo gets generated. The automation process allows you to offset a credit and debit memo, and it's all resolved with minimal touch. When we talked a little bit ago about analytics, dispute management is one of the areas where you're going to get a lot of value from using something like analytics. Reporting on these root causes and the high levels of deductions, whether it's high dollar or high volume, allows you to do a root cause analysis and then become proactive in your business. You can use these reporting tools to operationalize what's happening. You can go back and proactively manage. Say you have one specific product that is frequently being deducted for. Maybe you can go back to the product manager or R&D within your company and look at these things and try and fix them so that customers are no longer deducting. It's not just about getting a customer a credit memo as fast as you can. It's about improving the customer service, and it's about improving your business and driving profitable resolutions. I talked a little bit about cash application before. Again, probably one of the most manual processes. When you start talking about finance transformation, I know we as a company are seeing a lot of requests for our cash application module. We're getting a lot of RFP requests for cash application. It's extremely manual, and it's one of those areas where you don't need as many people hand offsetting the cash that comes in. Any good system, you should be able to link to your bank. It should be able to feed information in, whether it's a lockbox for checks, whether it's ACH or wire, whether it's pulling in information from a third-party remittance source. Should be able to pull all this information in. It should also have some OCR capabilities for scanning of checks, automated credit and debit matching. And then what happens is you should have a series of matched invoices. Now your cash application analyst should only be dealing with unmatched or unidentified receipts. If you look at a solution, for example, ours, we get to a point with our customers based on machine learning and looking at the patterns of customers paying, and we get to a point of about 96% accuracy. How does that benefit our customer? That means only 4% of your invoices coming in now need to be hand matched. If you've got a giant office of cash application analysts, you can now move them into other areas of the business where they can add some more value. And now you're only managing a small portion manually. Finally, a good system should really allow you to feed back into your ERP, into your GL module, and close these invoices. The cash application really does improve efficiency, and it truly, in terms of operational costs, is a true benefit to your company. So I talked a little bit about the automation, the different types of automation you can look at. So let's talk about the benefits of finance transformation. What impact will it have on your business? First and foremost, it's going to allow you to manage and improve your KPIs and metrics. We talked earlier about knowing what your CFO is what's important to them. If it's something like DSO, if it's something like cash flow or working capital, all of these things are going to help improve these things as well as give you more visibility into your KPIs and metrics. Order to cash, your accounts receivable, and your cash are key components of working capital and having free cash flow. Automating these areas is going to help have a direct impact on working capital management. Profitability is another area. We talked about that. Reallocating staff for different areas, looking at the areas in your business where you may be losing money. Is it from bad debt? Is it from product returns? All of these things, automating and being able to report on and being able to analyze all these components really help you in terms of profitability. Risk management, areas like credit and credit risk and onboarding of customers, these processes. If this is an area that you feel that you might be deficient, you can certainly consider automation for risk management. To help you grow, you need to keep your staff at the same levels, but yet you're growing. You're growing both inorganically as well as organically. Automation helps your business to scale, and it helps you to scale very quickly. And finally, if you're a publicly held company, shareholder confidence is very important. It can help benefit your stock price and certainly give your shareholders the confidence they need that you're operating smoothly, that you're making the most, you're giving them value, and that you're making the most of your operations. So in terms of new technology and the blueprint for a future state, we look at what we like to call the 4 C's. So we talk about cost. The first thing that you should be making sure is that if you look at finance transformation, it's going to be something that's going to help you reduce the cost of your operation. Utilizing these technologies to automate should definitely help you reduce your costs. Control, reducing cycle times, reducing the time it takes to onboard a customer, the time it takes to close a dispute, the time it takes to get the cash in your bank to be able to use for other things. Compliance being the third C. Many of us fall under Sarbanes-Oxley guidance, or as well as audit guidance. Anything, systems like ours, there's time and date stamps, there's consistency of processes. Of any finance transformation, you need to make sure that it becomes compliant. And we've talked a lot about cash flow. I think this is probably the obvious state, right? You want something that's going to improve cash flow, free up more cash to grow and improve the business. So let me just show you a couple, very quickly, some case studies, just so you can sort of wrap your head around how this works. How would I use this? How have we used this with our customers? Here's an example on the screen, a $3 billion heavy equipment manufacturer. They came to Emagia. They had over 22 systems that they were pulling information in, multiple languages, multiple countries where they had users. They had very high DSO. They had very high volume of disputes, and they had very high interest payments. Back then, borrowing money was expensive. It's not quite so expensive now. We don't have probably as many people coming to us looking for interest savings, but certainly people that wanting to reduce DSO. We centralized their AR. We consolidated it into a single source. We automated their dispute process. We helped them to resolve dispute resolution time, helped them to get task lists for their collectors. We brought it all into a single source so they could see their customers, and we were able to help them reduce their DSO within 9 months by 21 days. It was a 25% reduction in DSO and certainly helped them to improve their cash flow. Another example is a customer. It's an agrochemical company. They had seasonal spikes because they were dependent on growing seasons and farmers. What we determined was every June they had a spike in payment. We used our analytics to help them better forecast their cash so they could predict when they would have money and times where cash flow would be low. By doing all of this, by helping them be more consistent, by giving them visibility into their customers, we helped them to have a fairly significant DSO reduction. We improved their cash forecasting error rate by more than 55%. Didn't necessarily bring in more cash, but knowing when your money is coming in, knowing when you're going to be able to use it is very crucial in the business. We also help these guys with their SOX compliance. So you've heard Ian talk about what the executives are looking for, what we see in the industry. I've shared with you some very tangible ways you can get there. So how do you get started? First off, when you're starting the journey, make sure that you're aligned with your corporate goals. If you're a CFO, make sure that you're looking down to your team so that they understand your objectives and they're coming to you with automation requirements that fit your objectives. If you're a business unit owner, a business operations owner, a finance operations owner, make sure you're aligned with what your executives want. Gain management support for what you're doing as well. Everybody needs to be on the same page. Everybody needs to understand the benefits. IT is another key component in it. Not all solutions require a ton of IT intervention, but if you're going to be touching systems, somehow IT needs to be involved. Get them aligned with what you need to do. And then finally, understand the timeline. How long is it going to take a vendor or an internal process to get up and running and become beneficial to your organization? Most importantly, develop a business case. I can't tell you how many customers recently I've worked with that have asked me to work with them on a business case for management as well as developing an ROI. It is mission critical that you regain and recoup the costs of any system you put in place. Using something like Emagia Analytics to determine which areas that you need to focus on in the business, using the professional service teams like we have to be able to see where your processes can be improved. All of these things will help in developing a business case. It's crucial that if you are a manager or director or a shared service center leader, that when you go to your executives, you don't say, I want automation, I need automation. They'll kick you right out their door. I would kick you out the door. You need to be able to explain how it's going to benefit the organization and how it's going to pay for itself in the long run, and what benefits both internal and external customers as well as shareholders are going to get from utilizing the system. And with that, I want to thank you for taking the time to listen to both of us. We're going to now open the floor up for questions for anybody that might have them. As Akshay said initially, please use the chat button if you have any questions. So our first question that I see actually comes directly to Ian, and so I'm going to give it to Ian. Ian, they want to know how you used automation when you were at Unisys and how it benefited you.
Okay, yeah, one of the big things that we did was we had a worldwide e-invoicing program where basically we decided we needed to move away from the old paper-based system, and over a period of a year we implemented an e-invoicing system which had two benefits, I guess, well, multiple benefits, but the two major benefits was it slashed the cost of invoice delivery and production, and it also obviously increased decreased the delivery time. And it had a payback both in terms of cash flow and client satisfaction. So I think that was one of the major things we did there. We've also looked at automating cash application. And I think, as Phyllis said in her slide, I think this is an area of particularly big focus. And I think, really now with RPA and data recognition, this is an area of huge potential for companies to automate, to really speed things up, and again to cut the costs in that whole cycle. So they were two examples of where we used automation and certainly saw the benefits of them.
Great, thank you, Ian. The next question is, how do you identify where to begin the focus? And I'll kind of talk to this a little bit. You really need to understand what your company is focusing on. Is it cash flow? Is it too high a DSO? Are you growing rapidly? Do you need to bring people on? Do you need to grow without increasing your headcount? All of these things. You should use something like an analytics tool to see where your business is performing well. Perhaps bring in a professional services organization and help you to analyze what's going on, and all of this will sort of help drive. I'm going to sort of end this by the same way I started this. You can't boil the ocean. You cannot do everything all at once. You need to understand where in your business you're going to most benefit from finance transformation, and start the journey in sort of a phased approach. Do it with some methodology, and find out where you're going to get the most bang for your buck initially, and then move on from there. So do we have any more questions? Open it up for one more second if people have any more questions. Well, it doesn't look like we have any questions, so thank you very much. I want to thank you again today for joining us on the webinar. As Akshay said at the outset, it is being recorded and it will be found on the Emagia website under resources. It should be loaded either by the end of the day or hopefully tomorrow or the next day. Thank you again for joining us, and have a great day. Bye-bye.